Alright guys, so we're going to start with the Aussie CAD. I'm going to run through my entire portfolio, showing you what I'm looking at, what I'm not looking at, and this is going to be in place. I'm going to be running through the pairs exactly the same way that I do in the London live room. The only difference is you're not going to be able to interact, that's all. But I thought I'd put this video out just so you guys could get an insight into what I'm looking at, why I'm looking at it. We do have the election, so by the time this video comes out, you may just rip up all this analysis and throw it in the bin, and I might do the same. So we're going to make a start on the Aussie pairs. We're going to go through Aussie CAD, Aussie dollar, pound dollar, euro yen, pound yen, dollar yen, New Zealand dollar. And I'm going to do it in that order just to give you guys, I've just started watching the video, maybe you want to skip along to a section that will relate to some of the pairs that you trade, okay, if you don't trade all of those pairs. But I'm going to make a start on the Aussie CAD. This is some of the analysis we did earlier. I was looking for a pullback down into this kill zone. Didn't quite get down there before retesting the highs, so I didn't get the one-to-one risk reward that I wanted. Therefore, I couldn't involve myself in this trade. This was one of the few trades I was looking at on the radar today. I didn't want to be involved in too much anyway because of the elections tonight. And you can see we've now put in this higher close. So what I'm going to do is I'm going to erase off the drawing tools. We're going to go out to the daily, and we're going to start to do our IPDE process. Okay, so you can see that we're up at 103.25s. Now, if you watch the video that we put out last week and the week before, we've been following this pair. I've been putting out a couple of update videos on this pair, and we've been following the market. And we've had a couple of winning trades by doing that, and you guys who have seen those videos, you would have seen those trade setups that I was talking about. We were looking at trend continuation trades. We then hit a counter trend pattern trade, and now we're looking for trend continuation. And what we was doing is we were predicting a move up to this 0325s level. Okay, you can see looking left, we've got a little double top here, previous structure resistance. We've also got this inside structure support level as well. And what we were doing is we said, well, we've identified the market's bullish here. We're predicting that it's likely to test this level, which it has. We're now up at that level. So counter trend traders will be looking at this area, or CTS traders might be building out your CTS score at this level. And we're now up at this level, testing this area. Now these levels are like magnets, okay? And if we break and close above this level, let's just bring on our rectangle tool and use it as a DSR level. We'll just draw in this structure level here. If we can break and close above this area, the next level looking left of previous structure resistance is right up here at 0691. Now, will I be... I'm a trend continuation trader, so I only ever shoot for retest of the highs anyway. But if I'm trailing stops for a second target, you know, you could shoot for a move up to this area here. Okay, but for now we're at previous structure. We need to be mindful of that. And you counter trend CTS traders looking at that level. But as we drop down the time frames, what you're going to see is we are bullish. Okay, we're bullish, and what we looked at earlier was after putting in this new structure high outside return, we then put in a new structure high here outside return, then followed by a new structure high. Okay, if I just delete this line off, you're going to see we actually put in a new structure high here. Okay, so if we're looking to get long this pair, we'd need some kind of pullback. Okay, because if we're looking for a trend continuation trade, we need our stop to go below previous structure, below this previous outside return. So what that would mean is we'd need price action to pull right down in order for us to get... Remember what I said about being a trend continuation trader, right? Because of where we are at structure, I'm not going to be so arrogant to say we're going to retest this, or we're going to shoot beyond this level. And you can see we've actually put in a retest of this level now. So until this happened, I was looking for a pullback down into previous structure. And you can see we came down, we pushed down here, right? but we didn't quite push down into the level I was looking at. And just to explain that very clearly, what I was looking at is having an ATR based stop below this previous outside return. So we had, I think it was about 15 pip ATR at the time. 15 pips below this low was going to put us down just below 20, which meant that our stop loss would have been here. And in order to get a 1-to-1, if I was shooting for a retest of the highs, I wanted just over a 1-to-1. So my stop loss, my risk looked like this. My targets would have been a retest of the highs. Let's just colour this in green. And my kill zone would have been this area here. Okay, so what I was looking for is a pull back down into this area here. And then I would have looked for my entry reasons, which would have been a higher high, higher close candle. We didn't get that, and we've already broken and closed above this high. Now, what does that indicate? What we can do is we can erase all these tools now. If this is your trading time frame, you're saying to yourself, well, this eradicates any sort of level holding. There's no counter trend trade here because we've put in a new structure high, which signifies trend continuation. So the analysis just starts all over again. The problem is with this is the initial kill zone. Previous structure resistance becomes support. Okay, so I don't want to be getting involved at market, right? I don't want to just buy this up. But if we can come down and retest this level down here, I like this 290 level. If we can come down and retest this area down here, then I can take a shot and get long if my entry rules are met for a retest of the highs. Okay, so that's what I'm looking at on this pair. I'm not going to go down into the lower time frames purely because it will mean nothing when you see this video. So I'm going to stop at the 60, which is the lowest time frame that I carry out my swing trades on. So we're going to go through the pairs and just stop at the 60 on each pair. Okay, so that's the Aussie CAD. Let's go over to the Aussie Dollar. Aussie Dollar on the daily. We've been in consolidation for quite a while. There's some structure consolidation in here. And then depending on this candle, again, if this candle holds and this consolidation level holds, we'll be still consolidating in this channel here, right? We don't know what's going to happen with this. I'll probably be asleep by the time this candle closes. In fact, nope, we've got about 10 minutes until this candle closes. So if we break out of this level, it's that whole IPDE process. If we break above this high, where is the next level of structure looking left? Well, we can see, look left, bang, up here, 7,800, just above that 7,800 even handle number. We could expect to move up to that level. But until this candle closes, we don't know. Okay, so for now we're in consolidation, which makes my analysis very easy because all I'm looking for is consolidation patterns, right? And we've had a couple setting up. We've got a bearish cipher here, which is going to be invalid after the close of this candle because we've spiked up too high. But I'm essentially just looking for consolidation patterns, and it makes my analysis very easy because the rules of engagement on an advanced pattern, whether you trade Gartley's, bats, ciphers, butterflies, crabs, whatever it is, the rules of engagement are very definitive, very easy to follow, very easy to spot. If you've done your back testing and you've built up your RAS, these things pop out to you like the ice cream man coming down the road when you was a kid, right? But we are seeing some bullish movement at the moment, and if we break and close out of this channel here, this consolidation level here, we could potentially look for some trend continuation. But again, that'd all depend on if we can get a pullback. Where is the market likely to pull back to? Well, we can look left again. We can see we've got this structure consolidation, and if we held this many times, we can expect resistance to become support. So this move hasn't finished. We don't know what's going to happen, but if we get a little pullback here and we get a break and close, remember it's that if then thought process. If we break out of this area here, Then we can look for a pullback. Where is likely to hold? Well, resistance is likely to become support. Okay, so that's what I'm looking at on this pair. If we look out on the 60, we've actually put in a higher high, higher close. So I can look to get long if we do get this pullback. If we get this pullback down here, where can I get involved? Let's bring on our ATR, because I know that my stops need to go below this little structure level here. It's not ideal because we're in this consolidation zone, right? But it's below structure, so I'd want price action to push right down. Okay, right down into this area here. I can work out where my stops would need to go. I'm going to say 10 pips below this level here, so we're going to be down at 70, around this level here, 72s. Okay, let's bring on our fib retracement tool. You might go down to a lower time frame where you'll find structure, a bit more structure, a safer structure level to put stops, but I'm only going to go down to the 60, shooting for a retest of the highs. Make sure I get a minimum 1-to-1. Let's color this in green, and there we have it. So if we can get a pullback down into this area here, previous structure resistance should become support, and we may get an entry reason into this trade, look to ride this up for a retest of the highs. So it all depends on what happens with this move tonight. In the elections, again, watch out for this. If you're day trading into the Asia session, please be careful. All right, so that's the Aussie dollar. I'm going to go over to pound dollar next. And pound dollar, we've been consolidating for a few weeks down at this level. If you're looking for a counter trend trade, you counter trend traders, or me personally, if I was looking for a counter trend trade, I'd be looking for a test of this spike low down here. Okay, if we was to press down and test this spike low, that's where I'd look for a counter trend move. For now, we've been consolidating for weeks. We have seen a bullish breakout of this level. The underlying trend is bearish. Okay, and what we saw was we held this level, hold, support, broke down, and if you are looking to buy this market up, this would be an area that I'd be mindful of. If you're looking to play, you know, this, I'd expect some sell orders to kick in around this area here. Okay, as we drop down the time frames, we were looking at a trend. We were looking at a potential setup here earlier. Not one that I was going to get involved with. I think it hit targets. I wasn't involving myself in the markets today. I'm just going to be out of the markets for the election, and I'm going to get involved tomorrow. So once that's all settled down, then I'll involve myself in the markets. But what we was looking at is we saw this triple test down here, or we saw this spike low, makes it a little bit weird, but we had this test down here, test, okay, this consolidation zone, and we also had resistance, and we held this level here as well before breaking out. So what we was looking at is a potential long opportunity here as we pulled back down into this previous structure resistance level. But as we drop down the lower time frames, we actually found, and I think you can bring on a 382. If you bring, sorry, that's the wrong. Bring on our fib retracement tool. You can see just as we came down into that 382, we was holding this level, this 123.89 level, and you can see we had some bullish divergence on the RSI. That's the wrong. Bullish divergence on the RSI, equal lows here, and some of the guys in the room were looking to get involved in this, buy this market up around this level here. And I know Tony in the live room got involved in this. Not sure if he got out or he had a graceful exit. For those of you who believe in a graceful exit, because we saw a push down here, and then we got a chance to get out of that trade for those of you who used a graceful exit. But essentially, I was looking for a move up to test these highs for those of you who got involved. You can see we've actually broken down now. So nothing really on the table for me. I'm going to wait and see how this plays out into the election. This is one of the pairs that I'm expecting to see some movement on, so we'll just wait and see how this one goes. All right, guys, so we'll catch up with this one on Thursday. Now, the euro dollar. What we've looked at recently, we saw this previous structure support level hold. We had this doji candle looking left. RSI was oversold. As we come back down, as we were bearish, we came back down to test this level. We just so happened to put in another doji candle. RSI oversold, and it's the first time it's been oversold since this test here. Okay, and we were expecting, or we were looking for a counter trend move at this level. You can see we've had some relief. There was an influx of buy orders at this area here. We saw a relief as expected, and we said, well, if market continues to push up, where's it likely to go to? And as we look left, you can see we had our we were keeping an eye on this level here. 1150 is one of those areas in this market that I like to pay attention to. It's one of the figures, the prices that I've got written down on my little chart in this market. And I always say to you guys, if you recognize areas in the market that are respected over and over again, make sure you write those figures down, because you'll build up discretion. And you can see 1150 is one of those levels on this market. You can look left and you can see we've got structure. You can pick it out everywhere, right, where it holds at this level. And what you see is that if market respects that level, look at that. If market respects a certain level over and over again like this, well, if it ever comes back to that area, you know that market's likely to react at that level. So whether you're target taking, profit taking, and you might say to yourself, well, actually, I want to get targets just before that level because I know that usually market reacts at that level. Or you might use it as an entry into a sell order or buy order, whatever your view on the market, your bias on the market is at that time. Okay, but you can see we were bullish, and bang, we hit this like a wall. Look left, support, and we've got the middle section of this descending triangle or wedge pattern, whatever you want to call it, respected. Okay, respected at this level, and like a brick wall, we hit it and we see a reaction. Okay, so not only do we hit the 1150, we hit previous structure support, becomes resistance, and now we're sort of pushing down. We're in the middle of no man's. We had some gapping after the weekend, and we're in no man's land, right? So there's not really a lot that I'm looking at on this pair as well, and the reason for that is because of the elections again. You know, there's no point me analysing, getting involved in a trade in no man's land. I'm just waiting for the elections to roll out and then hopefully get some clear direction on where this market's likely to go next. Remember, we don't know what the markets are going to do. We only know the probability of what market's likely to do if certain areas are met, if certain structure levels are tested, and based on historical testing. So not really a lot I'm looking at on this at the moment, guys. So that's the euro dollar. Let's just drop down to the 60. Yeah, 60. I'm not looking at anything on this. Not looking at anything on this at the moment. All right, so euro dollar, bit of a quick one there. Spent a bit of time talking about the daily time frames. We're going to go to euro dollar now. Hopefully you're taking notes as we go. Euro yen, sorry, we're going to now. Euro yen again, structure consolidation. So what structure consolidation means is we've been testing structure, test again. We came down, almost tested here, and we're back up at this level. We made a prediction that market's likely to test this level again. Again, this is a decision point. Okay, CTS traders will be looking at this area here, maybe looking for RSI to go overbought, looking for a double top entry on a lower time frame maybe. You can ignore these advanced patterns. I'm just going to wipe those off because They're not patterns that I would have seen in my back testing, and plus I don't trade off of the daily charts anyway. I just use the daily time frames as a bird's eye view on what the market's doing, where it's likely to go, and a prediction on how it's likely to get there based on structure. So we're now up at this previous structure resistance level. We can expect some resistance at this level, okay, or we may just break through. But we can expect some resistance at this level, and as we drop down the lower time frames, you want to be mindful of that. And CTS traders will certainly be looking at this area here for a counter trend move or a CTS style trade setup. I don't think we quite get. We're a bit low for a equal measured move. But this area here is definitely a decision point. So I don't want to buy this up. I don't want to sell it. We're in consolidation. I'm looking for consolidation patterns only. We did have a butterfly formation a bit higher for anyone that trades butterflies. Personally, I don't, because I've got a real problem with stop loss placement. I started testing this pattern. I didn't carry on because I had difficulty placing a consistent stop loss because the decompletion point is beyond the X leg, the X point. So structure, to me, stops need to go above or below structure, and with a butterfly pattern or a crab, the decompletion is usually beyond the X point. So I had a real problem with that. But if you've got if you trade butterflies, then you're looking at an entry up at 116.40s. Okay, not a lot for me, guys. If we can test this level, there may be a counter trend trade set up on a day trading time frame, but like I say, I'm not going to go down to the lower time frames at the moment. And if we look on the 60, if you're looking to get long, again, it will depend. We still haven't violated this high here. Still haven't violated this high. So be mindful of that. Be mindful of that. But if you're looking to get long, you'll be looking for a pullback to retest this level here. In fact, this is one of the descending wedge patterns that we identified earlier on. All right, so nothing on this pair, guys. Not a lot on this pair at all. I'm going to clear all this off, and we'll just wait and see what happens. It's quite a good time to be out of the markets for me personally, because we're not missing much. All right, so next pair is going to be the pound yen. Again, support. We had this consolidation area, breakdown, right? Breakdown here. We put in this new structure low, and then we've started to pull back up. Where have we pulled back up into? Previous structure support. Now, this area here, this consolidation area looking left, wouldn't be a bad idea. Wouldn't be a bad area, sorry, to look for a trend continuation, right? So we are trending. The underlying trend is bearish. What I'm mindful of is this consolidation down here. We've literally held this level for about a month. So with that in mind, I'm not going to be as naive and arrogant to say I'm going to expect a retest of these lows down here, because you've got some hard work to get through pushing through this structure level, this consolidation level looking left. Okay, and also bear in mind that this is the pair that we call the beast. This pair has a massive ATR. I only involve myself really on trades that provide me with an optimal trading opportunity, and by that I mean, because the ATR is so high, lots of trend continuation trades mean that I have to get stops above previous structure, and to do that, you find that your stop loss, because I've got a minimum 100 pip stop limit, what you find is that because you've got 100 pip and the ATR is so high, you end up with a pretty tight kill zone. So the trend continuation trades certainly don't come as frequent on this pair as other pairs, because I just can't get those entry rules met. However, when they do, and I do get filled, then you know, you hit some big wins. You also hit some big losses, but remember, the flip side is that if you hit a winning trade, you have bigger wins. And if you've got a high probability trading strategy, okay, you know, positive expectancy, and you're right more than you're wrong, and when you win more than you lose when you're wrong, well, then all you've got to do is trade that day in, day out, and you're going to come out on top, right? So, going back to what I was saying, I want to be mindful of this area, and I don't want to push for, I don't want to say that market's going to shoot below this level purely because we've been consolidating for so long. And if I'm looking at any trading opportunity here, I need stops below or above structure, so it's going to be a massive stop loss no matter what you're looking at, whether you're a trend continuation, counter trend, or consolidation based trader. There's not a lot of opportunity in this market at the moment. If we go down to the 60, we're going to see that we had our Gartley completion here. Constellation's drawn this on. Not a pattern that I'm involving myself in, but you can see we had our X to A. This is going to be a really deep Gartley. You want to check your data on this because I think we come within 1 pip of the 786. Okay, so it might be a butterfly for you. It's a Gartley for me. We had a completion up at 130.24. Haven't hit targets yet, I don't believe, or we may have hit targets. Yes, we have hit targets because you would have had to adjust your targets here with price action if that's something you do. And there's reasons you might want to do that. I've done another video on YouTube on trailing your adjusting your targets, your profit targets with price action, and the pros and cons of doing that. I think the videos go. What's the video called? I'll have to check what the video is called, but go over there. It was one of the last. It was one of the last 4 weeks videos, one of the last 4 or 5 videos. So go and check that out. But you hit targets on this if you got involved. Well done. You would have been stopped out for break even though by the looks of it. So if you trade 2 conventional targets, doesn't look like you got the opportunity to get involved in that second, to squeeze the pips out of the market for that second target. So well done. You would have netted yourself a few pips there. Like I say, the ATR is quite high. Just bring on the ruler. You would have netted around 30 pips, which is nothing to be sniffed at. So that's what we're looking at on the pound yen. Haven't put in a higher close, so there's no trend continuation here for me at the moment, and we'll just have to wait and see, and again sit on our hands until after tomorrow. Dollar yen, what's this? This is still the analysis that we left on from earlier. So this was the prediction we made. I think we were here when the live room started, and you can see we broke out of this consolidation flag pattern here. Let's just get rid of this and we'll start from the dailies down. Going to go through this pair, then we've got New Zealand dollar, and that's about it. So let's go out to the dailies. Daily time frames on the New Zealand, on the euro, on the dollar yen, sorry. Again, we were consolidating right on this pair. We were consolidating in this channel down here. We broke out, violated this structure resistance level, and what you see is we're going to go straight down to the trading time frame. In fact, let's go to the 4 hour. What we saw was just a consolidation mess, right? What we did was we put in this higher close, and we thought maybe this is a trend continuation. Okay, then we put in another higher close, and we was looking for reasons to get long, and then followed by a new higher close, outside return, and then what we did is we put in a lower high, we broke down, violated this structure level, and now we're back up at a retest of the highs. So the moment this happens, this is consolidation for me. We're back up at previous structure resistance. There's nothing that I don't want to buy this market up. Okay, I think there was a little opportunity in here as well. This little wedge pattern or pennant pattern, whatever you want to call it. Let's just drop down and see that. Yep, similar pattern setting up there. This is what we just identified actually. Sorry guys, it's a bit late now. Don't normally do videos this late. This is what we was identifying earlier. If you're looking at where market's likely to go next, we're talking 105.40s, counter trend traders. RSI is already overbought. You might be looking for a double top up here. Personally, if I was looking for a double top for a counter trend move here, I'd be looking for a test of 105.39s, 105.40s. Okay, so maybe you're looking for a double top up here, some bearish divergence on the RSI, equal highs, and looking to sell this market. Okay, but until then, maybe you're looking for a pullback. If you're looking for a pullback and looking to get long, then I'd be looking for this area here. Remember, previous resistance becomes support. These wedge patterns, usually find that the middle of these patterns provides decent structure, and if you're looking to buy this up, should provide some decent support at this level. So keep an eye on that, guys. That's about it on the dollar yen. We're going to go over to the New Zealand dollar now. Go out on the dailies. On the dailies, we've got this big bat pattern setting up at 74.34. Been setting up for a while now. I've had this on the radar, and obviously it's a bat pattern, so it's going to be at the 886, which is nearing previous structure resistance, which is going to be a decent level for a counter trend trading opportunity anyway. CTS traders, or whether you trade advanced patterns on the dailies. I don't personally trade off of the daily time frames, but I do use it to give me that bird's eye view. What we were looking at is we were bullish and we struggled to break above this 7,300 even handle number here. Okay, so I'm going to draw a line in that, and then what we did, we finally broke through and we put in this 4 candle head formation here. I'll show you it was a head and shoulders on the 4 hour, and then once we broke down, in fact, let's go down to the 4 hour. Once we broke down here, this was the head and shoulders. Let's just remove these off so you can see it clearly. Whoops, wrong button. Let's just remove these off so you can see it clearly. Head, shoulder, head, neck, shoulder, head. Okay, this was the head and shoulders we were looking at, and what happened was, as we pushed up to test the neckline, previous support become resistance, and we started to push down. But then what happened next was we violated this and put in a new structure high. Okay, we was looking at this shoulder level earlier on in the live room, but we've broken and closed above that now as well. So if you're looking to get long for a retest of the highs, you need to let this, we don't know if this move's finished yet, but the first area I'll be looking at is this little consolidation wedge pattern in here, or flag pattern, whatever you want to call it, in here. I'd need price action to pull back down into this area, probably look at a lower time frame to get stops underneath this little structure level here, and then look to ride this up for a retest of the highs. And if you're looking for 2 targets, you might trail your stops up to this area here, which is previous structure resistance. Okay, so let's go down to the 60. You're going to see this this consolidation pattern here. This would be where I'd be looking to get stops below. If we can get a pullback down into this area, I can then look at getting my stop loss below previous structure. Shoot for a retest of the highs, make sure I get my 1-to-1 risk reward, and then just look out for my entry reasons in this zone here. Alright, so potential long trend continuation trade on the New Zealand dollar, and that is about it, guys. That's a wrap. So that's my entire portfolio, 35-minute video. Leave some comments below if you've got any comments. This is only going to be going out to you guys first. It will be released on the Trading Powered channel afterwards, but I may do that, or I may just launch it on on the channel anyway, and just put a link into the live room. But leave a comment below, guys, on the analysis. There's not a lot going on. It really is. I really am trying to swerve the markets until after the election, because I just don't think, I've done all this analysis and anything could happen overnight. So back into the markets tomorrow when it's settled down. See you guys in Akil's room, his live room, from 8 AM New York time, which is 1 PM UK time, and I'll be back in this live room on Thursday at 8 AM UK time. So thanks for watching, guys, and I'll see you then.